Welcome. Today, we're exploring the remarkable story of the Kuwaiti Dinar, a currency that stands out for its exceptional value. We'll examine the key factors that have contributed to its strength, from its link to oil reserves to its prudent economic management. Join us as we unravel the details. The Kuwaiti Dinar, KWD, reigns supreme as the strongest currency in the world, with a value of 1 KWD equal to $3.25. So, what makes the Kuwaiti Dinar so valuable? It all comes down to oil. Kuwait has some of the largest oil reserves globally, generating massive revenue for the country. This wealth allows Kuwait to maintain strong foreign reserves and implement stable fiscal policies that keep the dinar's value high. Kuwait's small population relative to its economic wealth also plays a part in its currency strength. With such a robust economy, the Kuwaiti dinar offers stability in forex trading and is a go-to currency for investors looking to trade in the Middle East. The dinar is the name of a number of currencies, mainly in the Arab world. It is derived from the Latin word denarius, which was the name of an ancient Roman coin. Many ancient Islamic nations used a form of dinar, with the most famous being the gold dinar used by the Umayyad Empire in the 600s. In recent history, the most notable dinar was used in Yugoslavia from 1965 until its dissolution. At present, 9 current countries use a form of dinar, which are Algeria, Bahrain, Iraq, Jordan, Kuwait, Libya, Macedonia, Serbia, and Tunisia. The Kuwaiti Dinar, KWD, consistently ranks as one of the world's strongest currencies, and its strength is rooted in a confluence of factors that have shaped Kuwait's economic landscape. To understand this strength, we must delve into the historical context, economic policies, and resource wealth that have contributed to the KWD's remarkable stability and value. 1. Abundant oil reserves and export dominance. The most significant factor driving the KWD's strength is Kuwait's vast oil reserves. Kuwait possesses some of the largest proven oil reserves globally, accounting for a substantial percentage of the world's total. This translates into a consistent and substantial revenue stream for the Kuwaiti government, primarily through oil exports. Oil constitutes a significant portion of Kuwait's GDP and export earnings. This heavy reliance on oil has created a robust economic foundation. The steady flow of USD from oil sales, which are then exchanged into KWD, bolsters the demand for the local currency. 2. Prudent economic policies and reserve management. The Kuwaiti government has historically pursued prudent economic policies, particularly in managing its oil wealth. A significant portion of oil revenues is channeled into the Future Generations Fund, FGF, a sovereign wealth fund designed to secure Kuwait's long-term economic prosperity. This fund acts as a buffer against fluctuations in oil prices and ensures intergenerational equity. The Central Bank of Kuwait has adopted conservative monetary policies, maintaining stable interest rates and controlling inflation. Kuwait has worked to ensure that there is strong monetary stability. 3. Pegged exchange rate and stability. The Central Bank of Kuwait maintains a pegged exchange rate, which further contributes to the KWD stability. While the exact method has altered over time, the Kuwaiti dinar has, for a long time, been linked to a weighted basket of major currencies, where the US dollar takes a major role. This peg provides a degree of predictability and stability, reducing exchange rate volatility and fostering investor confidence. The peg reduces the volatility that would be seen in a totally free floating currency. For low inflation and economic stability, Kuwait has generally maintained relatively low levels of inflation compared to many other countries. This price stability reinforces the KWD's purchasing power and makes it an attractive store of value. The management of the money supply by the central bank contributes to this stability. The country's wealth has allowed for strong government subsidies, which reduces the inflation seen by its citizens. 5. Political stability and investor confidence. Despite regional geopolitical tensions, Kuwait has generally enjoyed a relatively stable political environment. This stability, coupled with its sound economic policies, has fostered investor confidence and attracted foreign investment. The nation's vast wealth also allows it to navigate troubling geopolitical areas with a higher degree of stability than less wealthy nations. 6. High per capita income and small population. Kuwait's high per capita income and relatively small population contribute to its economic strength. The country's wealth is distributed among a smaller population, resulting in a higher standard of living and increased purchasing power. This also leads to a higher demand for the country's currency within its borders. In summary, the Kuwaiti dinar's strength is a product of a combination of factors: abundant oil reserves, prudent economic policies, a pegged exchange rate, low inflation, political stability, and a high per capita income. While the KWD's strength is heavily reliant on oil revenues, the Kuwaiti government's efforts to diversify its economy and build a sustainable financial future will play a crucial role in maintaining the KWD's value in the long term. It's important to remember that, like any currency, the KWD is subject to external economic forces and fluctuations in global oil prices. The global shift toward renewable energy may pose long-term challenges to oil-dependent economies. However, Kuwait's strong economic foundation and sound financial management have positioned the KWD as one of the world's most robust currencies. Thanks for watching, and don't forget to subscribe.